JetBlue Airways is in court this week to defend its acquisition of budget airline Spirit against the Justice Department. The $3.8 billion deal would create the fifth largest airline in the US. Now, JetBlue says the acquisition is necessary to compete with other big names in the airline space. But regulators argue the deal would raise costs and harm cost-conscious flyers. For more on this, Steve Trent, Citi Airline analyst, joins us now. So talk about this argument here, because JetBlue is saying that growth from other discount airlines is going to fill the void from this merger. But from what you're seeing, would that actually be true?
Well, good morning, and thank you for having me on, first off. I think that's at least partially true. If one looks at what JetBlue has proposed in terms of airport slots, it does look to relinquish some slots to, Frontier and Allegiant in the Northeast, and possibly some of the Fort Lauderdale assets that Spirit has, for example, assuming that the two are allowed to merge. So I think for JetBlue's purposes, in addition to competition, I think this is at least partially about JetBlue needing the equipment and the pilots, and acquiring Spirit would arguably get them there.
Steve, what's the case you're operating under right now? I mean, you've got a neutral rating on the stock, specifically on Spirit. You've talked about the fallout that could happen if this falls through. What's the base case as it stands for you?
Yeah, certainly. So at this juncture, quite frankly, the merger can really go either way. I don't have enough confidence that it is going to go through, that I'm actually incorporating the Spirit acquisition into our JetBlue estimates at this juncture. The other thing that is really hanging out there, if one looks at the economic conditions we've seen for JetBlue and Spirit over the last year, both carriers are on track to report losses for this year. And Spirit, on our numbers, those losses, earnings losses, extend into 2025. We now have a GTF engine issue. In addition to the equity consideration, Spirit Airlines has over $5 billion of net debt. So economically speaking, how is JetBlue going to do that? That's not 100% clear. I think as a first step, it would be good to know, for instance, if the government's going to allow this to happen, and then I think we'd cross that bridge when we get there. But at this juncture, we are not considering Spirit in our JetBlue estimates.
So then, Steve, when you look at the fees that tend to get tacked on for Spirit Airlines at the moment, people do always say, there's been lots of jokes and memes online about, all the different fees that end up coming in versus what you would pay with some of these bigger airlines. When it comes to what is actually cost conscious for the consumer then, how strong is that argument?
I do think that if Spirit disappears, will the United States have one less ultra low cost carrier? Yes. I think the second piece of the pie there is what can that segment of the market bear? Because if one looks at, for example, your typical premium economy passenger on Delta or United Airlines, that economic profile of that passenger arguably is in better shape than a passenger looking for the cheapest tickets on an ultra low cost flight, where the latter passenger might be sensitive about checking a bag in order to avoid fees. So when we look at where the market's migrated, we've actually seen a really important inflection relative to the pandemic. The network airlines are doing much better. And the ultra low cost carriers and discount carriers generally, we think, face some headwinds in terms of where are those consumers in more modest economic profiles versus the typical person taking a economy plus or first class on Delta or United.
And so what are some of the changes that you're seeing airlines making as they adjust to this sort of post-revenge travel period here and looking at perhaps new international routes and other sources of growth here? What is going to be the next catalyst for airlines?
Yeah, absolutely. So if you're an international long-haul airline, we think 2024 it's going to be efficiently adding metal onto those markets. Where transatlantic has been strong, and we would say that Trans-Pacific probably has some good legs to run on as we look at the next several quarters, because the comps are relatively easy. And then I think when we think about the post-pandemic world, what's changed and how much of this is structural, I think some of it might be structural, based in part on many consumers no longer in the office 5 days a week. So there's more hybrid type travel relative to 2019. Maybe your typical pre-pandemic close-in booking strength is not what it used to be. So those New York to Boston day trips are definitely far from pre-pandemic levels. So with that in mind, it's conceivable that trunk route, mainline, premium economy type domestic flow is going to do much better than service at the back of the plane, or especially relative to the discount airline. So to the degree that a domestic airline can pivot towards that middle category, it probably, economically speaking, looks like a much better opportunity.
And we'll certainly continue to watch that. I appreciate you joining us for your insights. Steve Trent, Citi Airline analyst, thank you so much.